Timing the Cryptocurrency Markets, a guide to cycle trading. Is it possible to time the cryptocurrency markets? When is the best time to get into Bitcoin or Ethereum or the altcoins? This is what we're going to talk about today on Crypto Intel. My name is Max. I'm your guide. Let's get started. Okay, so let's first start by describing what I'm talking about when I say cycle trading. So in Bitcoin land, cycle trading is when you're trading in anticipation of the halving. So what you're looking for here is buying in when Bitcoin is low right here, letting it go up, and then getting out as it starts to go down. This is one cycle. And this is where we want to trade, whether we're trading Bitcoin or Ethereum or any of the other alts. If we go over here, we see this was the last cycle, or the previous cycle, I should say. And again, Bitcoin got up to about 17,000, around 18,000 in that cycle. But again, what we wanted to do was we wanted to begin our trading as cycle traders when it's in its accumulation area or when it's low, allow it to go up and then get out right as it peaks. So how do you time that? How do you look at how that's going to happen? So there's a couple ways to do it. The first is to look at the Bitcoin halving cycle. So let's look over here. And you can see in this chart that Bitcoin has gone through 3 previous halving cycles. And again, you can see here that it starts low. There's an accumulation period right here. It moves up rapidly in the space of about a year. And then it turns over and it starts going down for about a year, accumulation period for about a year, moves up rapidly, goes down again, accumulation, moves up rapidly, goes down. So these are the cycles for Bitcoin, and this is what you want to look for when you want to start getting in. Now, one of the important points in cycle trading is understanding where accumulation zones are. And so that is, let me just expand this a little bit so you can see. You can see here, this was the high of the cycle in 2018. It started to go down, and for about a year, you can see here's December of 2018. This is January. We have a downtrend. We have a bear market. But then we have a period in this cycle from December of 2018 all the way to around April of 2019 where we have an accumulation zone. Here is where we can buy and then wait for it to jump up. Now, usually in a cycle, we have a year where Bitcoin will go up and down. In the previous cycle, it was in the year 2019. So in the year 2018, at the beginning of that year, Bitcoin reached its peak. For most of 2018, it went down. For between the end of 2018 and the end of 2019, we had an accumulation period, a little rise, and another accumulation period. And then beginning in 2020, we started seeing the rise. And it wasn't until the end of 2020 that we really had the parabolic rise, which led to our top here. So this is the kind of thing that we want to look for when we're doing cycle trading. So where are we now? Well, you can see in 2021, at the end of 2021, beginning of 2022, we had our cycle top. Bitcoin started its bear run, went all the way down, all the way down, all the way until the end of 2022. Then we had a slight accumulation period. Now we have a rising period, but this year, 2023, just like 2019, is a year of up and down. Okay, so we're going to go up. We might go down a little bit more, as I've said in previous videos. We could go down to, back down to test the lows here at around, 16,000, or we could just kind of go accumulate for a while. And usually, if we go by past cycles, what we're going to see is that sometime around the beginning of 2024, that's when Bitcoin is going to start its parabolic bull run. So when we're talking about cycle trading. What we want to do is look for accumulation zones right here. Even now is a good accumulation zone. Anything between this high here of 31,000 and down here to 16,000 is going to be an accumulation zone, all this area right here. So this is what we want to look for. Now, in terms of what to buy in cycle trading as it relates to cryptocurrencies, there is a pattern that has happened over and over again. And that pattern is Bitcoin to the major altcoins like Ethereum, and then finally to smaller altcoins. So what happens, and if we go back and look, let's just go back and look at what happens when the bull run starts. So another way that we can generally time our cryptocurrency cycle trades is by looking at some on-chain analysis. And I'm going to refer you now to a site called Glassnode Studio, where you can see some of these charts. Some of the charts you have to pay a fee of $20, $30 a month or so, but you can do that every once in a while, pay for a month, and just take a look at where we are with the charts. But let me just show you a couple. Let me move myself up here. Let me show you just a couple charts that can help us in our analysis of when is a good time to get in and start our cycle trading. So the first thing I like to look at is the number of new addresses right here. And you can see that right here, what we're talking about is what addresses that appeared for the first time in a transaction of the native coin, which in this case is Bitcoin. So what this shows, and again, you can see by just going back to the previous cycles in the 2018 top, you can see that the yellow here is the new addresses. It peaked right as Bitcoin price was peaking. And so if we look now at where we're at now, you see again in the last peak, we had a peak here, and again another peak here. This was our top in the most recent cycle. And now you see that we're starting to peak again. And that is because Bitcoin is in its phase where it goes up and down for a year before it really has the strong bull run. So we're going up, we're going back down. But you can see that there are some new addresses being made. So that's one way. Another way is to look at the difficulty ribbon. Now that has to do, let's just look at the definition. Again, the difficulty ribbon uses moving averages so that we can see Bitcoin mining difficulty. And it creates a ribbon. And usually when the ribbon compresses, when it gets closer together, those are good buying opportunities. And you can see again by the price. You see here at the peak when in 2018, when Bitcoin reached its peak in the previous cycle, the ribbon had a lot of space within. It wasn't compressed at all. As it went into its bear market in the last cycle and it went down, you can see right here, it's a little hard to see, but right here is where it's most compressed, and that represents a good buying opportunity. In 2019, Bitcoin had again the up and down year. It went up, it went back down, and again, as it went up, the ribbon got broader. So where are we now? Well, you can see that we're pretty compressed right now. So again, we're in the transitional year. We're in the year where price goes up and it might go down. I don't know how far it's going to go down, but it'll go down somewhat. And then it's going to start its big run again. So looking at the difficulty ribbon can help with that. Another thing I like to look at is the stablecoin supply. So stablecoins supply will tell us, oops, I don't want to do that. Let me go back here. Stablecoin supply will give us a good idea of, again, when the buying power to purchase Bitcoin is being moved. So if we look at again the let me put this. Let me move this here to the beginning of the thing. So we can see that, I'm going to stop that here. Now another chart to look at to determine when to get in or get out of our cycle trades is the transfer volume to exchanges. In other words, what we're talking about here is how is money flowing into an exchange or flowing out of an exchange? And this can give us a hint as to when people are putting money in to buy or taking money out because they've sold. So you can see here, again, going back to 2018, you can see here at the peak, there is very little volume, right? Very little volume in exchanges, in money flowing into exchanges. As we were moving up, the volume was increasing drastically. So you can see that when we're at a bottom or an accumulation range, as you start to see increase in inflow into exchanges, you know that the big money is putting money on exchanges to buy. So that can give you a hint of when to buy. And at the same time, as we get to peaks, you can see that it starts to drop off drastically. So that's another way that we can look and time a little bit on our cycle trades. Another one would be the NUPL, or the net unrealized profit and loss. And basically, and it shows you right here, when this trend is in the red, that is a good time to buy. You see, this is an accumulation zone in 2019, right here. Accumulation zone. NUPL's in the red, a good time to buy. As we get to the top, you see the NUPL goes into the green. And this is going to be a time when when it's a good idea to start reducing your positions and start selling. So where are we right now? Well, you know, as this shows, around the beginning, the end of last year, beginning of this year, the NUPL was at its lowest. We're kind of mid-range right here. I fully expect that we're probably going to go down a little bit more. So we're right in the time when it's a good time to buy again. And then finally, let's look at the market cap to the thermal cap ratio, which basically assesses if an asset's price is currently trading at a premium with respect to the spend by miners. And again, you know, just to make it simple, we can look at when we have, as we did the peak of the market in 2018, you can see that the market cap to thermal cap ratio was at its highest. When it gets low into this green zone, that usually is an accumulation zone. As you can see right here, a good time to buy. Again, in the beginning of 2020, this was during the COVID, a good time to buy. And, you know, again, at the end of 2022, beginning of this year, we're right in the green zone. We're a little bit above it now. So again, this is showing still that we are at a time when we're accumulating. So we looked at technical analysis to help us determine when to get into our cycle trades and get out of our cycle trades. We looked at some on-chain analysis charts to help us with that as well. There are one or two other things that we can do to help us determine when to start getting in on our longer term cycle trades. And the third thing would be sentiment analysis. So let's take a look at what if there's interest in things like Bitcoin or cryptocurrencies. When is that occurring? We can look at, for example, here we can look at Google Trends, and we can see that I put Bitcoin here. We can see again that in 2018, or December of 2017, right when the price of Bitcoin was peaking, the interest on Bitcoin was at its highest. But we can also use this to determine when interest is starting to pick up. And that means that more people are coming in, so the price is probably going to move because of that. So again, in the 2019 period, when we were basically in up and down year, from the beginning of this cycle, you can see that interest was low, but it started to pick up right as Bitcoin was starting to move around the middle of 2020. So we can use sentiment analysis to help us understand when are the retail people coming in. Right now it's pretty low, but again, we'll see as it starts to pick up, that'll be a good sign that things are changing and the price is moving. We can also look at some traffic analysis too. So if you want to go to a site like SimilarWeb.com, you can plug in some exchanges like Coinbase.com or Kraken.com, and you can see what kind of visitation they're getting. And again, if there's an uptick in the visits, if there's a movement in visits to these type of websites, that's going to give us a good clue as to where the price is going. And then finally, I just want to talk a little bit about fundamental analysis. So, this here is your technical analysis. It's going to, by looking at the past cycles, by looking at trend lines and so forth, we can get a good idea of when to get in and get out. But you also want to look, especially when you start thinking about investing in or trading altcoins during a market cycle, you want to make sure that the safest bets are those that have good fundamentals. Now, that's not the most important thing when it comes to just trading on a short-term basis. It really doesn't even matter that much, because on a short-term basis, you're just looking for the ups and downs within a day, a week, or a couple of weeks. But when you're talking about cycle analysis, then what you want to do is look for good fundamentals. And that means a pretty strong team. Who's in back of the altcoin? Who's doing the development? Is it a unique and good technology? Is it something people are going to want to use? And finally, are there a community behind the altcoin that's a strong community that can kind of stabilize the price? So if market conditions, move the price up and down, they're going to act as a support or a resistance for the price. So those three things are important as well. So again, when you're looking to time your longer term trends, what you want to do is look at your technicals. You want to look at some on-chain analysis. You want to get a feel for the sentiment, and you want to get a feel for some of the fundamentals of a particular project as you're getting into it. So that's it for today. If you like the content, please give us a like, and we'll talk to you next time.